left-hand side of the screen, but not much. Michael Lee with us this morning to cover the market for us. Okay, Cyber Monday sales, $12.4 billion, up 9.6% from last year. What does that tell you?
Well, Stuart, it's the continued shift of shopping from bricks and mortars into online. People don't want to leave their house. They don't want to get involved in the crowds. But overall, Black Friday spend, according to MasterCard's spending pulse, was only up 2.4% year over year. And when you look at that in the context of 3.5% to 4% inflation, not exactly spectacular.
So what does that tell you about the holiday sales season that's coming up?
Yeah, we're probably going to be up between 3% and 4%, which is about even with inflation. Not a total collapse, but the amount of money that's being spent on credit cards, and in addition to credit cards, alternative financing methods, whether that's Affirm or PayPal or any of these other different ways of financing short-term purchases, that's up 15% year over year. And when you look at credit card debt, at the lowest 100 banks, delinquencies are at all-time highs. Delinquencies at the top 100 banks are at decade highs. And if you look at that in total, it looks like a hockey stick of them spiking. So the consumer is weakening. I think this is kind of the last hurrah before things fall off a cliff earlier next year.
Fall off a cliff earlier next year. Are you talking about the economy and the market?
Well, definitely the economy. I think the market can continue to hold in there because what's been driving the market this year, the Magnificent Seven, are the most recession-resilient businesses with the cleanest balance sheets. And in times of economic uncertainty, businesses that have basically bulletproof business models continue to take share. And I think that's going to continue. So I think the market on a whole could hang in there while the underlying economy continues to deteriorate.
Okay, one last one for you. Do you think that the Nvidia run is over?
I think in the short term, yes. And I think that's because the buy side, the hedge fund world, the large mutual fund managers are unsure of what 2025 tech spend is going to be. And so, as I've been saying, next year, Nvidia is going to do $100 billion in revenue. They're going to earn $50 billion in earnings, which means the stock's only trading at about 25 times earnings now. So I would use this period of nothingness with Nvidia to accumulate because everything we know about AI is that it's exponential growth. So I think 2025 will be a much bigger tech spend year for artificial intelligence, and our favorite pickaxe manufacturer, pickaxe seller in front of the gold mine is Nvidia, and so I continue to add to it.
A big Nvidia fan is Mike Lee. All right, the market is now open. There you go. Dramatic, isn't it? We've opened actually slightly dead.